What is up, everyone? My name is Anthony, and in this video, I'm going to do some important updates on the broader stock market indexes and talk about exactly what I see happening over this next week and the specific wave counts and technical analysis behind it. So for this video, I want to emphasize that for this past week, we did confirm that we are in the alternate count where we're coming up for a broader degree X wave rather than a smaller degree X wave, and I'll talk about what that exactly means for upcoming price action. So just to zoom in and kind of explain what's going on in SPY, so this is the S&P 500. We topped out here for a bunch of wave 5s, and then we moved down in a series of complex corrections. So as part of the structure, we have a W leg down, and then an X wave up, and then a Y leg down. So in my past video, I wasn't really sure whether we're having this Y leg extend into a WXY downwards, but now that we've bottomed out here and then we've moved significantly past that bottom area zone, now we know and confirm that we're in this alternate count where we're moving up for a broader degree X wave. And this doesn't really fundamentally change anything about price action because we're still going to have this broader scale Y leg down, which should bring some significant downside to the market indexes. But this just means that we come up a little bit higher and take a little bit more time for this X wave up. And that's what we're getting right now. So in terms of price action on SPY and QQQ, we are at that upper limit range of this broader scale X wave from just sheer probability and time Fibonacci extension levels. And I'll talk about that just in a bit. But just to zoom in on the wave count a little bit. So after we have this broader scale W, broader scale X, and then a broader scale Y, as you can see, each one of these moves subdivides into 3 structures. So the W moves into a 1, 2, 3 structure, a corrective structure, and you can really subdivide this further downwards. So for example, this Y leg of this broader scale W wave subdivided into a WXY, and this Y leg of that structure also subdivided into a WXY over here. So a WXY. And as you can see, that W wave right here has that kind of 1, 2, 3 structure. So this is a very complicated set of corrective price actions, which is why it can be a little bit difficult to trade. But right here, this is where you're going to trap a lot of bulls. So for those of you in puts, we have been tanking this upside here, which is a little bit unfortunate, but I do have faith that we'll come down for another broader degree Y leg. So that will bring back profitability to the puts. This is why I have not worried too much about tanking this X wave up so far. I think we'll be okay, and I'll explain why exactly. So just to zoom in on this X wave right here. So we have within this X, we have a WXY internal subdivision, and you can further subdivide these internal subdivisions. So over here, this W wave takes on an ABC, so a 3-legged move, corrective structure. Same for the X, an ABC, or you could call this a WXY. And then now the real question for here, now we're in the Y leg of this X wave. So from what it seems, I think we have an ABC structure that forms this Y leg of the X. Another possible count, which I hope is not the case, but it could be, I just want to throw that out there, is that we have an A up here and then a B downwards, and then we're going to push upwards once again for a C wave. And that would simply just kind of waste more time. It wouldn't really change anything about price action, but because of course, when you trade options, you don't want to really waste time. So this would be a little bit annoying to deal with, but that is a possibility. For now, I do think we could hit this ABC structure already. And that means we're topping out right here for the broader degree X wave. And I'm actually going to explain why I think that. So to kind of bring the aspect of time into this wave count, I'm going to take something called the trend-based fib time. So this is a tool on TradingView. So all we're doing is going to take the start of this W wave, the start of the X wave over here. So this is around October 4th, and we're going to drag it up to the top of this internal subdivision W wave right here. And then we can see that that X wave right here kind of ended exactly at that 1.382 extension, which makes sense. But the thing I want to point out is over here. So if we do redo that exact same count, so we take W to the X, and we have right here. So notice that right at this exact point, so October 15th, pretty much right at market close, we hit that 1-to-1 extension of time. So the time that means the time that it took for this internal subdivision W to form is right around the exact time that it is now for this internal Y wave to form within this broader scale X wave. So this could mean that we could have a turning point right here. Of course, we could extend a little bit further, but just in terms of time, we are relatively close to hitting that topping period for this X wave. So I would stay put for these options trades that we're having right now. And of course, like when you're trading based on wave theory, time is not really the most determinant factor that I like basing trades off of, but that's just to give some background information of where we are in terms of Fibonacci time expressions. So right now, I do think we're pretty close to this X wave. And if we look at the Fibonacci retracement levels, so over here, this is the main fib levels that we're looking out for. And right now we're sandwiched right between the 0.618 and the 0.786. And as you know, this is a very common stopping area for X waves in a WXY structure. And in terms of even more internal subdivisions, so over here, just doing the extension of the WXY, we're right about at that 1-to-1. We're not quite there yet, That 1-to-1 is at 446. So just keep in mind, if we do continue to push up higher, that we're approaching lots of resistance areas right here. The 1-to-1 extension is at 446.75. In addition to some of these upper extensions, and the 0.786 retracement level is right around 448. So you can definitely expect these to be stopping areas for this X wave if it continues to push upwards. Of course, if it rejects here and it falls enough where we can confirm that we're not in this ABC structure anymore. So for example, if it continued to fall down here and we look at the structure, so if it really starts to tank here, then that would lessen the chance of this being some kind of ABC. But of course, if we kind of have some support here and then we can push up, then that might mean we're in that internal theory of subdivision. But for now, I do think that we are very close to this X wave topping area, regardless of which count we're in, just because the alternate count states that we're going to come down for a Y leg, and that will definitely bring a significant amount of downside to the indexes. So let's say that we do stop out here, so right around 446. So we can take the extensions of this W wave, so the length of this W wave up to the top right here, and WXYs typically go down to at least the 1-to-1 extension zone right here. So that's all the way down to 418, and that's my initial target zone for this whole correction. And of course, that would bring a hefty chunk of downside to the indexes, so almost 6% downside. So if you're writing puts throughout that, I guarantee you that you'll be profitable on any trades that were carried out previously. So I think just stick to the trade and we'll be okay in the long term. But for now, it's a little bit rough because we are at that top of the X wave right here. So just stay put and I think we'll be okay. So now we'll go to QQQ. So this is pretty much the exact same scenario as SPY. Right here, we're pushing up. We're not quite as far into those retracement levels of the W wave. For example, here we're right sandwiched between the 0.5 and the 0.618. Typically for X waves up, I like to see it at least touch the 0.618. We haven't hit there yet. So potentially that could mean we're still due for some kind of ABC internal subdivision. But of course, I'll keep an eye on this. And even if we do have that as the count, that wouldn't take too much more time, maybe a couple trading days or more. It would be a little bit annoying to deal with, but it doesn't change the fact that we'll come down for a while like in the future. So in terms of QQQ, just the exact same count, a WXY structure, forming your W wave, and then we're coming up for an X wave right here, and that X wave forms your WXY internal subdivision. And of course, if we do have this ABC like this over here, and this is the topping area, then that would form the top of your X wave here, and then we can start heading downwards for a Y leg in the future. So just exact same thing as SPY. I see it coming up to very similar levels. And of course, you can take the extensions of this internal X wave subdivision right here, and you can see that we're right at that 0.786. We kind of closed right above it. So maybe we come up to touch the 1-to-1. Would be just a little bit more upside left to the indexes. But for now, I do think we're very close to rejection levels in terms of SPY and QQQ. And very clearly, just want to emphasize that this move upwards is non-impulsive. So you don't have to worry about this being some kind of wave 1, 2, 3, 4, 5 up. That's just not the case. Whenever you have this kind of price action from just trading Elliott wave theory a lot, this is just off the top of my eyes. It's not impulsive. This is a very corrective structure. And when you have corrective structure, that means you need to come down for another leg of downside, and that would form your Y leg right here. So in terms of VIX, this is also kind of confirming the technical analysis from those two aspects. So right now we're hovering right under trend line support and resistance. So that's right around 16.5. And the reason why I like this VIX right now, because right now we're under that. So that's actually technically means that we're bullish on the indexes because it's under resistance. But the fact that if you start moving above it, that will trigger some bearish signals on the indexes. So that's what I'm looking for. I'm looking for VIX to go above this resistance and support area right here. So if we do, then we can potentially come up to retest these yellow trend lines all the way up here on VIX. And that would definitely bring some significant downside to the indexes, which would be correlated with your Y leg right here. So also, just to complement this analysis, I want to bring up some other individual stocks that do have a high market share within the S&P 500 and the NASDAQ, and one of them is NVIDIA. So NVIDIA over here, we do have a very similar structure as the market, so a WXY, and this whole structure is forming your W wave, and now we're working on this broader scale X wave, and then we have a broader scale Y leg downwards. So in terms of taking the whole retracement of this W wave up, we are above that 0.618 level. We're actually sandwiched again between the 0.618 and the 0.786 retracement levels. So that means we're at a very high chance of rejecting for this failed impulse wave X wave right here. And in terms of getting that internal subdivision of this X wave, once again, you have a three-legged structure, so a WXY. And I already took the Fibonacci extension levels of this internal subdivision. As you can see, we're right about at the 0.786 extension level at 219. And we've already kind of rejected that. We're hovering right above it. So if we do see a little bit more upside to the indexes, then maybe NVDA will come up to touch these resistance areas. But at this point, these are just where a lot of bears are going to be and a lot of selling is going to occur. So I expect it to fall either way for that Y leg downwards if we do come up to touch these upper extension levels. So just in terms of this individual stock, I do see it being bearish. Also for MRNA, so this is not really specifically a reflective of the indexes, but just keep in mind that over here we have a corrective structure unfolding, and there still needs to be more downside to the stock because we have an A, B, C, and for the C wave, we are subdividing into a wave 1 down, wave 2 up, and then a wave 3 down, and now working on this wave 4 up, and then we should have a wave 5 down to complete that C wave over here of this broader scale ABC correction. And typically, the wave 5 of C can bring some significant downside to individual stocks. And if we do have that downside here, that would likely correlate with this drop in the markets for this Y leg. So in terms of individual stocks, they are confirming that there needs to be some more selling off, especially since these are still in a very corrective structure. And I can also subdivide the internal subdivision of Moderna stock. So over here, we have within this wave 3, I actually want to subdivide this wave 3. So it's very clearly impulsive. We have a wave 1 down, wave 2 up here, wave 3 down, wave 4 up, and then a wave 5 downwards over here. And then you kind of see that falling wedge pattern, which indicates that you could come up for a wave 4, and that's exactly what we got here. And this red box between around 320 or 330 to 360 is that typical resistance area for the wave 4. And as you can see, we've already started to reject off of that and push downwards. So that could be your wave 4. Of course, you could technically still have some kind of A, B, C structure for that wave 4, just to keep in mind. But in general, this stock should head downwards for the wave 5 of C. And that would correlate with downside in the markets. So for AMC, this is also just or highly requested individual stock to look at. This isn't really correlated with the markets, but I do want to emphasize that we did get a push upwards for this wave C of this B wave of an ABC correction. So we've already kind of rejected and interacted with these extension levels of this ABC correction. And I do expect us to impulsively sell off for a C wave. So at these levels, at 40 above, I would actually take a short position on this stock. It looks very bearish to me. As you can see, this move upwards is corrective. So just in terms of getting that subdivision, you could have just a A wave up, then a B wave down, and then the C wave is kind of like kind of failing. It looks like it's right around the 0.76 extensions and the 0.618. So we could come up to test the 1-to-1, but in general, after we reject off some of these key extension zones, then we can sell off possibly to the 30s and under. So that's what I see for AMC. That's just going to be a quick update on the markets. In general, for this week, I am looking for bearishness. Even if we do have the technically this very small adjustment to the subdivisions of this X wave, it doesn't really matter in the long term because we're going to sell off of that Y leg. So just hold on to the puts for now, and I wouldn't really worry too much about them at the moment. As long as you have some puts left for this Y leg of downside, then I think we'll be okay. So that's why I'm not worried yet, just looking like a typical X wave up of a broader degree WXY correction. So that's going to be it for this video. Of course, I will post updates as price action unfolds this week in the Discord, so stay tuned for that. And I'll see you in the next video. Thank you so much for watching.